Currency market dynamics, yen under pressure, dollar's safe haven appeal, and geopolitical tensions. The dollar index remained close to its highest level in more than 4 months on Wednesday, keeping the yen near its lowest in decades. However, concerns over possible currency intervention by Tokyo limited further declines in the Japanese currency. The euro and the pound held steady against the dollar, with the dollar index flat at 104.72. Unexpectedly low Eurozone inflation data reinforced expectations of a rate cut by the European Central Bank in June. The Japanese yen, still reeling from recent lows against the dollar, faced pressure despite the Bank of Japan's cautious approach to raising rates. Efforts by Japanese officials to bolster the currency posed challenges for the dollar. Market sentiment was cautious, with concerns about geopolitical tensions potentially impacting currency markets. Gold and oil prices rose, signaling a flight to safety, but the dollar remained relatively stable. The U.S. dollar was perceived as a safer bet due to its yield attractiveness, despite pressure on the Swiss franc and other safe haven currencies. Strong U.S. economic data pushed the benchmark 10-year Treasury yield to a 4-month high, reducing expectations for aggressive rate cuts by the Federal Reserve. The Chinese yuan weakened against the dollar despite positive manufacturing data, reflecting concerns about economic headwinds. This weakness also impacted currencies like the Australian and New Zealand dollars, often used as proxies for the yuan. Exchange dollars and more than 30 currencies with us. Register your company at TKambio US and transact with the best exchange rate, backed by Monex US. Subscribe and stay updated with exchange rate news.